The global crypto market has been riding a wave of volatility, largely influenced by ongoing geopolitical tensions, especially in the Middle East. The recent flare-up between Israel and Iran briefly rattled investor confidence, causing Bitcoin to drop below $99,000 earlier this week. However, as news of a fragile ceasefire emerged, the market quickly regained its footing. Bitcoin rebounded to around $107,600, while major altcoins like Ethereum, XRP, and Solana saw strong recoveries of 9% to 11%. Bitcoin continues to behave as both a risk asset and, increasingly, a hedge in times of uncertainty. Despite its initial dip, BTC has proven relatively resilient, bolstered by institutional demand, macroeconomic uncertainty, and a growing narrative around it being a digital reserve asset. Analysts expect Bitcoin to trade within a $94,000 to $114,000 range through the summer, as it digests global tensions and incoming regulation. The launch of a U.S. strategic Bitcoin reserve earlier this year further legitimized Bitcoin's place in the global financial system, signaling long-term bullish potential. Ethereum has also bounced back sharply, currently sitting around $2,448. Its rebound reflects renewed investor optimism, supported by growing stablecoin legislation and increased institutional involvement. ETH's utility in DeFi and tokenization continues to draw attention, especially as regulators begin crafting frameworks that could push more adoption. XRP has been one of the more surprising movers. Now trading around $2.13, it surged from recent lows of $1.90 thanks to whale accumulation and institutional flows, which totaled over $10 million this month. Technical indicators suggest that if current trends continue, XRP could climb toward the $2.65 mark in the near term. Solana is also gaining momentum. Priced at around $143, SOL has rebounded strongly, backed by a spike in developer activity, record futures volume on CME, and growing institutional interest. Several major players including Invesco and Galaxy have submitted spot Solana ETF filings, which could open the floodgates for broader adoption. Strategic investments, such as treasury allocations by Vault Ventures, point to SOL becoming a key player in enterprise-grade crypto infrastructure. Traders are watching closely for a breakout above the $148 resistance level. Beyond price movements, the broader crypto ecosystem has been buzzing with key developments. The FATF issued a new warning about crypto-related illicit finance, citing over $51 billion in suspicious flows, and linking recent hacks, such as a $1.5 billion Bybit breach, to North Korean actors. Meanwhile, in Iran, a cyber attack on the country's largest exchange, Nobatex, resulted in over $100 million in losses, adding to the uncertainty around regional infrastructure stability. In the US, a crackdown on crypto ATMs has begun, with several states moving to regulate or ban them in response to rising fraud concerns. On the flip side, major financial institutions like MasterCard and Fiserv are experimenting with Solana-based stablecoins, further legitimizing the blockchain's speed and cost efficiency in traditional finance. As for investor strategy, corporate treasuries are increasingly treating crypto as a core asset. Neptune Digital, for example, has diversified into SOL staking and Bitcoin holdings, boasting annualized returns of up to 100% on structured derivatives. These moves reflect a shift in how institutions are approaching crypto, not just as a speculative asset, but as a long-term financial instrument. In summary, despite the turbulence caused by global conflicts, crypto markets have shown surprising resilience. Bitcoin remains a leading barometer of macro sentiment, while altcoins like Ethereum, XRP, and Solana are carving out stronger institutional use cases. With ETF applications on the rise, treasury adoption growing, and regulatory clarity beginning to emerge, the stage may be set for a strong second half of 2025, assuming global stability holds and risk appetite continues to return.